G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. So in this video, I want to discuss the different DCA methods of Bitcoin specifically. But we can show you some altcoins on the regular DCA. So we have regular DCA, and then we're going to talk about a dynamic DCA, which includes the risk metric, which is a very, very smart indicator. I'll show you what that is. And yeah, we'll go over the differences between the two. You know, buying consistently, weekly or monthly, whatever your period you like to buy, which is a normal DCA and never selling, or a dynamic DCA, which is buying at certain risk levels and selling at certain risk levels. So you're basically buying and selling on the way up, investing all the way through, you know, for years and years. This is not a trading strategy. This is a long-term strategy. So I want to show you that. So first of all, we have the, here it is, we have the normal DCA. So DCA calculator. And this is going from 2021, 21st of July to now. It's basically 3 years worth of data. This is all I can go back to. I can't go any further, unfortunately. The website. So we have $200 a week, and we would have 31,000 invested. And today, from that point, a few years ago, our portfolio will be worth 56,000. Okay, so we would have profited 25,500 with 81% performance. So that's Bitcoin. And it shows you that line there. So you would have had a good amount of money invested up to this point, 669, and then it goes down. See, it goes down 47, 48, and then it goes back up. So you're in a loss here, at a loss. Okay, and then it goes up, and you're still down 24%, down 13%, 18%. See the negative number. And then you just about break even here, pretty much going into 2023 in March, which is because you went through all this. This is the bear market, okay? Now you're up 4%, and then I can see get above this dotted line, you're up in profits, okay? So that just shows you what that dotted line versus price being above it, versus being below it. Obviously, you're going to be in a loss versus being above it, being profit. So you have Bitcoin there, so you have 81%. Then we go with Ethereum. Ethereum's a bit different. So same period, weekly amounts the same. We have a 2% increase. Ethereum did outperform Bitcoin slightly, but pretty much on par with 54,000 portfolio after 29.8 was invested and $25,000 profit. So Ethereum's a bit better. We had an outlier. This one did a lot better than Bitcoin during this period. We had a 94%, same amount invested. We had a 94% increase compared to 81% Bitcoin, 83% Ethereum, and 57,000 portfolio value after $28,000 profit. So BNB, which is Binance Coin, did outperform during this 3-year period. I'll show you another one that did outperform as well, which is Solana. It destroyed Bitcoin and Ethereum and BNB. It did 270% in the same period, slightly more invested. And as you can see, we have an $84,000 profit. Wow. And $115,000 portfolio value. So destroyed the others. So that's an outlier, okay? So I'm just showing you BNB and Solana did outperform Bitcoin. Ethereum slightly. Ethereum pretty much on par. And I can show you Dogecoin real quick. Dogecoin pretty much matched Bitcoin and Ethereum right in between there, 82%. So we gained 24,500 and $54,000 portfolio value after 29,800 was invested. So Dogecoin, the biggest meme coin, is on par with Bitcoin and Ethereum, which is quite interesting. Now I'll show you some altcoins that aren't doing so well. XRP, same amount invested, down 1%, down $340, which is a little bit less. So I just mentioned $340. So we're down. So no profit at all for XRP during this 3-year period, which is quite bad. Even worse, we have Cardano down 14% from 31,000 invested, and we have negative 4,400. So you're losing on Cardano 3-year DCA strategy. Then we can show you a couple more. So Polkadot did slightly better, 1% negative. So quite similar to XRP. Okay, very the same. Polkadot. Then we'll go Polygon for the last one, just to have a look. And we're down even more than Cardano. We're down 19%. Negative 5,700 and down. Okay. So underperforming Bitcoin, majority altcoins. And you can go through the list, you know, like a Litecoin, your favorite, just like a silver to Bitcoin. It's up 6%. So very, very bad performance against Bitcoin. Versus 81% Bitcoin gain. And then you got like others, you know, your favorites. But yeah, I just want to go over those quick ones. Just showing you regular DCA. Okay, so that's that. Now we have the regular DCA on the left versus the risk-based DCA, which I mentioned before. And we have a conservative, okay, we have a moderate and aggressive style of strategy. Okay, so we have those 3 types of strategies. And this is on the right-hand side, okay? This is a risk-based model, which I've mentioned before, which I can show you how these 3 individuals work. We have the same amount purchased. We have a weekly. We have the same dates, 21st 7th 2021 to the 18th of the 7th 2024. So 3-year period. And yeah, I'll show you what this risk differences are. 3 different types of strategies. So we have, first of all, we have a conservative strategy. Okay. So you're buying when the risk is 0 to 20. You're selling when it's 40 to 80. So the risk chart is this here, this oscillator. And this just calculates, it's like social metrics, looking at sentiment, looking at all different, it's got all these different things built into it. And I've just left it as it is. And you can see that when it gets to red, right, you sell. When it gets to the blue levels, you buy. And it's a dotted representation of the Bitcoin price as it goes higher. When there's more greed in the market, and when there's fear, it goes more into a blue territory. Okay, I just want to show you that real quick. And we have conservative, so 0 to 20. All right, as I showed you here. This is 30 line, but anything below 20, you're buying. Okay. Anything above 40 to 80, okay. So from this level here, you know, roughly here, sorry. So from this green to the red, you're selling. So green to red, you're selling, okay. And it goes back even further over here as well. So green, 40 to red, you're selling, righto. And the amount you sell depends on the risk. So the lower the risk, the more you buy. So just buying more, you buy less. As it goes up, you start selling at even bigger increments. Okay, you sell the most at 80. So that's the conservative approach. We have moderate, which is you're buying 0 to 50 risk, and your suggested sell range is between 50 and 100. We do have a buffer zone of 45 to 55 where you don't do anything. Okay, just to allow for that space there. You're buying and selling and overlapping each other. It's an overlap, so you don't want that overlap. So you have a 10 risk range to do to nothing. Sit on your hands and wait, either to hit. So you're buying aggressively as it goes lower risk, and it goes higher risk. You start buying less, take a break, and then when Bitcoin gets to a 55 and above, you start ramping up your buys. And yeah, that's the moderate approach. You're buying and selling more often. And the aggressive approach, which you're buying up to a 70 risk, which is quite crazy, and then you're selling at 80 to 100 right at the top here, which barely gets to. I don't think it's got to very often at all, so I wouldn't go to 190 would be probably max. If you count for Bitcoin over time, as it gets bigger, you get diminishing returns, because it's harder to move Bitcoin price as it gets larger and larger and larger, and getting to 100 risks is quite difficult. We have a lot of buying pressure. It's very, very, very hard to get to it. So if it does get there, you sell a lot. Okay, so it's the same thing. You buy more with the lower risk as it goes higher. It gets to 70 though, you stop buying, and then you take a pause. You get to 80, you start selling, and obviously the more aggressive. Okay, so it's dynamic DCAing. It's the amounts at different risk levels. It's not just a set amount like a DCA. Normal DCA is a set amount per week and set and forget. This is a bit different. And yeah, they're the different three approaches. Just wanted to go over with you, and we'll go back to the calculator. And this three period, weekly $200. We'll start with a conservative approach, and we'll calculate this. And as you see, $38,000 for both. Okay, we have 100% gain from buying every week. That's it, not selling. The conservative approach for this 3 period, you'd be up 200%, and you have a 78,000 profit versus 38,000, so it's a double. And yeah, your wealth will be 116 versus 76, which is quite good. And you'd have 12,000 cash on hand versus nothing because you're not selling. Okay, and just extra cash left over, so you can see that there. And yeah, the amounts invested that I mentioned. So that's the first strategy, which beats the regular DCA. So 200% gain and $116,000. So that's what to remember: 116 going from 38. And this will change because the amount invested will go up for both. Okay, so as you can see, it goes up. So instead of 38,000, we're at 50,000. Righto, for a moderate, because we're investing more, buying up a higher risk level, and we have the exact same 101%, but we have 187%. It's a little bit less profit on the moderate, but a lot more here. 93,000, 50,000. So we have 143 versus 100. So you'd have more money there. Okay, I believe the other one was 110,000, so you have a 30,000 extra gain there, and you had 15,000 versus the 12,000 like I mentioned before, the conservative. So we had 15, we had extra $3,000 in cash, and 50,000 dollar investment. So we have outperformed the conservative approach, but we've invested more and we've sold more, and we've come up with a bigger gain. Okay, and obviously beats the regular DCA. I'll show you this down the bottom just as we finish up. Aggressive, so going from 50,000 to 98,000, to twice as much invested, same 101%. We have 127%, it's not quite as good. So it goes down. It's not as good as 187% or 200%, but still good, and we end up with more money. So we had 150,000 or so. We now have 222,000. So go back to moderate. We had 140,000. Go back to aggressive. We had 15,000 cash. And then you go to aggressive, we have $1,500 cash, so less cash, but a substantially bigger profit of like around 80k extra. So more money there versus 200,000. So yeah, that's the differences in each strategy. You can see that they beat the regular DCA. That's what's important. And this is the period for the regular DCA. So in blue, when you buy, just regularly, okay? It's regularly, no risk metric involved. Just buying. You get a risk-based DCA. You can see we start buying here, okay, according to the risk metrics. And this is an aggressive approach, okay? So buying up higher risk levels. I'll show you the risk levels as we go up. So buy here. This is a risk level of 40 and above. And it went up and up and up. Higher risk levels, so the risk levels go up. And then we get to this level here, which is around 80 risk, we sell. And we buy on the way down because the risk levels are so high. So you do cop a lot of drawdown here, which is quite scary. If you think about buying on the way down, it's very, very scary. It's an aggressive approach. And we haven't sold yet, okay? So that's why, see that profit there. Doesn't seem as impressive. We go back to a moderate. And I can show you here. It's a bit different. As I mentioned back here, in moderate strategy, you're buying between 0 and 50, okay? And selling between 50 and 100 with the buffer in between of 45 and 55. So see, I said 0 to 50, you're buying. And you start selling above 50, which is 60 risk. You start selling. See that? And then risk goes down below 50 and you start buying again. Okay, all the way down because we're below 50 in the risk in orange. And we're just been going up and up and up. And then we get a sell. Okay, the risk doesn't show here, unfortunately. But yeah, this risk would have been above 50 to sell. And we're buying again, okay? So just showing the differences there, the different percentages versus a normal DCA. So it does beat the DCA, regular DCA strategy. Alright guys, I hope you enjoyed that one. Just going over the regular DCA strategy for Bitcoin and then comparing against the altcoins and seeing which ones did outperform and most of them that didn't outperform. And seeing, from $200 a week for a 3-year period from 2021 to 2024, July's, to see what the result was. And after that, we talked about the dynamic DCA versus regular DCA, talking about whether the regular DCA was just enough versus a dynamic DCA where you dollar cost at a certain risk level. So the lower the risk, the higher you buy, the more you buy, and then you buy less and less as the risk goes up, and then risk goes higher. You sell, and much after you sell more and more at the top, okay? Versus regular DCA where you just buy incrementally every week. And yeah, are the two differences. And seeing that dynamic DCAing from the conservative to the moderate and aggressive, they all outperform the regular DCA strategy. And then also just looking, intertwining, going back and forth between the indicator that I have on my trading view and what you can use yourself to chart it, showing the current risk level and where to buy and where to sell. And so looking at those sort of factors to give you an idea of over time, what you can achieve and just experimenting with risk levels and seeing what works for you, and yeah, investing over the long haul is the way to do it. Okay, so thank you very much. Please smash the like, comment your thoughts below, and subscribe to stay updated, and I'll catch you in the next one. Cheers.